Hello everyone, my name is Srikar Susarla and welcome back to my channel. This is a new video in the series Opportunity where we will be discussing about market opportunities where we can invest our money for short term, maybe like 3 years. Yes, 3 years is a short term period, not long term. So we will be discussing about 3 categories depending on the risk profile, and let's get started. Before we discuss about different opportunities available in the market, I would like to give a cautionary warning that this is a financial video only for educational purpose and not for investment purpose, and this is more like a record keeping for me in the form of video and to discuss with everyone, have a healthy discussion. And always remember that any of the stock investments you make have the potential to lose money, so you need to diversify your investments wisely and across different sectors, so that even if one sector fails or even if one stock goes to zero, and there are chances that stocks can go to zero, examples like Yes Bank. So if your stock goes to zero and it's only 5% of the portfolio, it won't impact much, but if it is 50%, then it will impact. So do take care of that, and let's go ahead with the video. The first opportunity is FDs. As you know, the interest rates have been rising steadily and the banks have also increased the FD rates. Currently the FD rates are around like at least 7.1% in reputed banks like HDFC, ICICI, and for senior citizens it goes to 7.6% if the tenure is more than 15 months, and some of the banks have something like 15 to 18 months, then alone they will be providing this high interest rate. Otherwise they would be providing 7% nominal interest. So if you think that you don't want to take that many risks and if you want some good money, then this is a good opportunity to invest in FDs. The next category is Indian stock markets. Currently there are few good opportunities in Indian markets where we can invest for like 3 years and can get good returns. Let's discuss each of them. The first stock which we are going to discuss is Larsen & Toubro Technology Service, LTTS. It's a subsidiary of L&T and it's based on aerospace, automobiles, telecom and medical sectors. It does engineering and research and development in these areas and provides services, and its major revenue comes from the North America. It's mostly like 60%, which is a revenue concentration risk, and its revenues and profits are growing steadily over the past few years. And if you see the stock price, it is like trading like 40% discount to its all-time high, which means there is a good chance of making 50+% in return in the coming months or years. And at least I would say that if you are investing in any of the stocks or any of the instrument, it's better to stay for long term, which will prevent the volatility in the markets, so that you will make good returns. So yeah, this was the first stock, and let's go ahead with the next one. Next is Tata Elxsi. It provides design and technology services in automotive, media, communication and healthcare industries, and it's one of the world leading companies in this sector. And it is also a similar company to LTTS, and we are discussing this as well because you can divide your investment in these two companies instead of placing your bet on just one company, and so that it diversifies your risk. Tata Elxsi also has good revenue split in Europe, North America and India regions, instead of LTTS having 60% in America alone. Tata Elxsi has like 39% or 30% in Europe and another 30% in America. So there is a good diversification here. Next is Relaxo Footwears Limited. It is a leading manufacturer of footwears in India which deals in non-leather products. It has got Sparks, Relaxo, Flight and Bahamas under its umbrella, and it deals in value segment in the market, and it is a leader in that segment, so that like under 200, under 300 rupees if you want a branded slipper or a canvas shoes, or under 500 if you want a shoe, then Relaxo is the go-to brand. And all the schools shoes which people wear are mostly from Relaxo itself, and it is a leader in that segment. and it's currently trading around 40% low from its all-time high, which means there is a good chance of making 60+% or even 100% plus returns in the coming years. Next is not just a stock but the entire industry itself. It's paints industry, where all the stocks in this sector are trading like 20% discount to their all-time high, at least 20%. And if you see Indigo Paints, then they are trading at least like 50 or 60% below their all-time high, which gives a good opportunity to invest in these companies. And if you have a time horizon of 2 or 3 years, then these companies would give you good returns. The next category which we are going to discuss are US tech stocks. The US market is yet to recover completely when compared to the Indian market, and currently there are few very good companies waiting for us to be grabbed, and let's discuss each of them. The first company which we are going to discuss is Alphabet, the parent company of Google, which everyone knows, and no one's day goes by without using any of its product like Gmail, YouTube, or even Maps or Google Cloud. So it's fairly trading low when compared to its value. To its all-time high, it's trading at like 50% down, and there's a good chance of making money in the long term. Next up is Microsoft Corporations. Almost 80% of the PCs which everyone uses has Windows on it, and it's not going to change for a long time because it's affordable. And after the arrival of Satya Nadella, he had invested in cloud computing and expanded Microsoft into a new venture, Microsoft Azure as well, which has been gaining good exposure in the industry. And after his recent investments in OpenAI, the chat GPT thing, which has been making buzz a lot, its shares bounced back from the lows which had made, and there is a good opportunity to make money in this. Moving on, we have Amazon.com, which has revolutionized the way we shop and is the largest online retailer in the world, and it also provides services in cloud computing and even streaming services and home services, and it shows no signs of stopping, and it is currently available at 60% discount to its all-time high, which gives us like 80% gain potential in the near future. Next is Meta, which was earlier known as Facebook, has got WhatsApp and Instagram under its belt as well, and because of its focus on metaverse, it got its name changed to Meta because that defines what it does. And it's currently trading at 50% discount, which gives us 100% potential in the near future if the company works out that metaverse is the next thing to go for. Next is Tesla. This company is known for its electric cars and renewable energy solutions, and it has disrupted the electric industry and made all the other players in the industry to make a shift towards electric companies, and it is currently one of the top highly valuable companies in the world, and it's currently trading at 50% discount to its all-time high, which gives a good potential of making money in the long term. And it's also famous for its CEO Elon Musk, who has disrupted almost all the industries he had entered into. These are not the only stocks which are available at good bargain. There are other stocks like Adobe, TSMC, Airbnb, Nvdia, and even Apple, which is like 20% below its all-time high. And these are very good companies, and do your due diligence before investing in any of the above companies discussed. This was just a financial educational video and not a recommendation, and I may or may not be holding positions in some of these companies, so this was just an educational video. And because this was a demand video, I would continue with the Retire Early series in the next week. Thank you.